Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, October 23rd, and this is the weekly market update. As usual, the disclaimer, anything that you hear or see on this video or hear on the podcast is not to be taken as investment advice. I'm not a financial advisor. I am not licensed to give you advice. I'm just a guy on the internet. Please take that into consideration. Please do your own due diligence. It's your money and it's your responsibility. Okay, before we get started, just wanted to talk about a couple things before we get into the weekly news. This is going to be really energy heavy this week. But one of the things I wanted to talk about was, things are really starting to go our way, at least with oil prices. I'm not gleefully rubbing my hands together because, I think that oil is going to go over $100 a barrel and I'm going to make all this money. A lot of people are going to suffer. It was sad the other day. I was watching clips. I don't really have cable or a satellite dish, but I do see clips on Twitter and other social media. And they wheeled out Mr. Biden and they were talking to him about high gasoline prices and inflation and these type of things. And it really struck me how clueless most politicians really are. I mean, I kind of knew this already. It's not a big revelation, but they really don't have a clue how the real world works. And he was talking about people in the Middle Easterners are trying to call him and he's going to do this. He's not going to do anything. Oil's going over $100 a barrel, unless we have some kind of like economic meltdown. The world's recovering, and not enough investment has happened. And, we're going to be looking at very high energy prices for, I think, an extended period of time. Now, we've positioned the portfolio for that, and that's going to be to our benefit. But I don't want to lose sight of the fact that, this is going to hurt a lot of people. $5 gasoline already in California. Natural gas prices already you're seeing on the news reports where they're telling people they can expect their winter heating costs to be 30 to 50% higher. People just don't have the money. And I think there's going to be blowback. A year ago, 2 years ago, 3 years ago, we were talking about energy independence. We were exporting energy. We were opening up new frontiers. Millions of jobs have been created. It's really sad that, we really have to get like a rational energy policy in this country. Other people that we're competing with in the world are doing that. They're not just focusing on one type of energy, i.e. unreliables, and then demonizing the fuel sources that have allowed the progress in the civilization that we take for granted. And if we don't prioritize a rational, real, well thought out and strategic energy policy, we're going to be an also-ran country. And it's just the current leadership that we have in this country, and even the past regimes, they really don't have a clue. And it's unfortunate. Just a reminder that I appreciate the viewers. The channel continues to grow. I really am doing this because you guys are responding. Appreciate the comments. We get a lot of comments, great comments. I really do take my commission seriously. I sometimes feel a little bit guilty because I do work a regular job and do this and write the newsletter. And sometimes I feel like I don't put enough effort into the newsletter. I do put a lot of effort into it, but I'm almost to the point where I'm thinking about maybe taking this whole thing full time. I haven't decided yet, but I mean, if I could just do this full time, I'm thinking about how deep diving into the information I can go, how much better I could make the production quality of these things. So it's not a certainty yet, something I'm thinking about, but the commission and the trust that people have given me. I mean, people have written me letters, or not letters, but emails or direct messages. And, we've really affected some people's lives. We've got people to reconsider the way they think about things, about economics, about energy, about just life in general. We've had some of our picks in our newsletter create wealth for people that has changed their life in a positive way. And, this is what I really wanted to do. I mean, anything worth doing is worth doing for a profit. I do believe that. That's why I don't just give my work away. So I don't like the sleazy newsletter business and being a newsletter, if you will. I'm trying to be an information source for people. I'm trying to give people ask me, what do I get when you subscribe? Well, I'm not just printing out like some tip sheet at the horse track and you just pick these stocks and you don't have to do anything. I'm trying to impart knowledge and give you the benefit of the mistakes that I've made over the last 30 or 40 years of my investing career. The greatest asset we have is time. And I wasted a lot because I didn't have the benefit of learning things from a mentor that could give me a well-rounded education on some of these things. And maybe sometimes that's just what it is. You have to go through it yourself and then develop your own style, and you have to get those battle scars. I'm not sure, but I think that the advice that's given by many wise people, which I believe also at this stage of my life, it's better to learn hard lessons vicariously through other people's misfortune than experiencing it yourself. So that's what we're trying to do. We're trying to teach good investment practice, the difference between investing and speculating, how to look at these things, how psychology plays into effect of this, how sentiment, how to control emotions. These are all very important things, maybe even more important, or probably more important than actually picking the individual stocks. So, I do pump and pimp the newsletter in these videos. The Actionable Intelligence Alert newsletter has taken off. We've had really good returns. If you're interested, you can go into the show notes. There's a subscription link there. 12 issues a year, commentary. We now have a Discord channel where we have a lot of the subscribers interacting. We're getting a lot of good information there and exchanges. It gives me the ability not to have to wait a month to update you if something happens with the company, positive, negative, whatever. I can go on the Discord channel and let people know what's going on. We can discuss it and move quicker, if you will. You don't have to wait a month for an update. So I think that's going to be helpful. I think so far so good on that. And I'm just willing to expand that. I'm thinking about maybe doing a webinar with subscribers and having some more interaction. I'm still thinking about whether or not I should do a live chat. So just things I'm thinking about. Time is most of it, guys. I mean, I get up at 5, I get home at 5 or 6. This is a Friday night I'm doing this so I can have this thing ready to go for you first thing Saturday morning, because I have to work on Saturday. So a lot of effort and work goes into this. I'm not, I'm not looking for any sympathy or anything. I choose to do this, but I do like doing this, and I do appreciate the feedback. And I feel like, we really are helping people. So I read every email people send me, good and bad, the DMs. I try to respond as best I can. But I do feel, like I said, a certain amount of responsibility, because I know people are listening to me and people are considering the things I say, and in some cases implementing it in their own life. So I think that, like I said, is a tremendous trust and responsibility. So thank you for that. All right, enough patting myself on the back. Let's get into the news for this week. So, the thesis that we've really been talking about since we've had this channel and the newsletter is insufficient investment. Really, the ability of the shale industry in the United States to suck up all the oxygen in the room and the capital, and basically be the supplier, the gap supplier. We took production in the U.S. up to 13 million barrels. It wasn't sustainable for many reasons. It was mostly financed with a lot of debt because of low interest rates. We've told that story before. You couple that with what happened with the COVID supply contraction, it just decimated the shale industry. And so we have this situation now where investment really hasn't been happening in the rest of the non-OPEC world. And as we're going to show, it seems like maybe OPEC hasn't really been investing either. And so now we're in a situation where you can see here the COVID stock builds and then how we've been working that off. And we're down to onshore crude stocks are below the pre-pandemic levels, and they're plunging still. And, this is partially because, OPEC plus Russia has restricted supply, even though they are opening it back up, 400,000 barrels per day of production being added over the next 3 months, in addition to the 400,000 last month, I believe. And they're slowly bringing production back on, but demand is growing. That's the problem. Demand's coming back, and in many places, as was shown in another slide, it's exceeding pre-pandemic levels. And now we're going to see even more opening up of economies, growth in economies. India, China's having the Evergrande issue and stuff, but you got to remember something. Just because something isn't continuing to grow at 6 or 8% a year, you still have this plateau of demand, right? When somebody trades in their bicycle for a scooter and then trades in the scooter for a car, they don't just park the car in the garage. So you have this level of inelastic demand that's kind of created, right? And it doesn't just go away because the economy slows down. It takes a lot to really destroy supply or demand for these fuels. So you couple that with the fact that things are opening back up. International air travel is getting ready to expand in another month or so. COVID is receding. I track it on various websites. Yes, they're trying to keep it in the news, but it is receding around the world. You're seeing a big outbreak in Russia, though, but it is what it is, and it's going away. This is what typically happens with these things, and life is going to slowly but surely return. The fact is, we have this huge investment gap that we haven't made in energy. The gap is very large. And now we're going to pay the piper for it. And it's not going to be able to be fixed by Mr. Biden calling people in the Middle East or calling oil executives in the United States. I mean, he actually did that too, evidently. He was calling around and asking the oil executives that he was demonizing for the last 2 years on the campaign trail or however long, and the first year of his administration, or telling people like that teenage girl when he told her that he promised her we were going to get rid of fossil fuels, and then turn around and ask, CEO of Oxy and these other companies to increase production. They're not going to do it. So he's in a pickle. And I don't want to get into the political side of that in this podcast or this video, but $5 and $6 gasoline is not going to be conducive to his long-term political prospects, or the Democratic parties for that matter. And we're not just seeing it here, it's all around the world, right? It's everywhere. And in many places, it's a lot worse than in the United States. And this is the same for coal and natural gas and everything. Just about every commodity you turn around. I was talking about that on a Discord channel with some of the other members. It's like every time you turn around, it's something new. It's like magnesium. Who even thinks about what is magnesium used for? Well, there's a shortage of that evidently now. So it's every time you turn around, it's like tin and all these other things. Everything's making these all-time highs and stuff. So it's like you can't kiss all the girls, right? But there's a lot of opportunity out there. And I don't think it's a flash in the pan. Will there be pullbacks? Yes, there will be pullbacks. Will there be volatility? Yes, there'll be volatility. We saw that in uranium. We had the big pullback after the run, the FOMO run. It pulled back. We're back up to those levels. I mean, the Sprott situation is working exactly like we thought it would. So we are now starting to reap the paper rewards. Remember, we got to actually sell these things to take the money off the table, but I think it's still too early to sell at this point. But this is one of our main ideas here, right? And as long as this keeps going down, this means prices for crude are going up. So one of the ideas that's out there that's gaining more traction, Josh Young was talking about some bison interests. He really got me on this, and I'm just finding more and more news items. This we've already seen, and I've talked about in previous videos, where certain OPEC countries, i.e. Nigeria, i.e. Algeria, i.e. Angola, are not, or as Angola and Nigeria, were not able to meet their quotas. So they're just leaving money on the table. They're deliberately not pumping. No, they're not able to. They don't have the production capacity because they haven't made the investments. And as we know, extractive industries decline over time. And so they're unable to meet their quota requirements. And so that's probably, some people I've seen have said, well, that's not a problem because the Gulf states, UAE, Kuwait, Saudi will pick up the slack. But can they? Here was an article, and I'll put a link to these articles in the show notes. Kuwait says drilling facilities work underway to reverse declining oil production capacity. Kuwait will be able to unlock some 500,000 barrels a day of potential output capacity in the next 2 years, the head of its state oil company said, seeking to allay concerns over the firm's own admission that its ability to pump crude had declined for this third straight year. So I think we could take Kuwait off the list of countries that are going to pick up the slack. In its latest annual report released earlier this month, Kuwait Oil said its maximum sustainable production capacity had fallen to 2.579 million barrels a day as of March 31st, down 572,000 barrels from 2018. So if you don't put money back in to look for and develop new reserves, your production declines over time. Exxon talked about this, right? This is 101 petroleum geology. This is not unknown. And so you wonder what's Saudi really got going on, right? What's, the UAE, they're supposed to pick up all the slack. And, we're going to be quite possibly in the first half of 2022, well over 100 million barrels a day. We're going to be back over to pre-pandemic levels of demand. And yet I don't think supply is going to be able to hit it. We're looking at anywhere from 2.5 to 1.5 million barrels a day daily declines of inventories being drawn down. And the idea is, well, OPEC's just doing that to get the price up. Yeah, I believe there's a certain amount of that, but I think we're going to find out who hasn't been spending money on, facilities and new reserves and developing new reserves. We're already starting to see it. Like I said, Nigeria, Angola, where else? The United States, our production is off in shale. A lot of the big companies, publicly traded companies, have already said they're not going to go out and go nuts drilling. There are a lot of independents out there drilling, people we don't hear about. So, there is activity out there. There are people that will commit money, but, that's not going to turn production in the U.S. around and make it grow. As I've said before, do I think that at some point in some price level that everybody will be throwing money at this? Yes. I think we're going to have a spike in oil prices. It's going to be like a big fireworks finale, and that'll be the time to hit the sell button. And then, prices will be sustained for some period of time, and eventually they'll solve the problem. High prices cure high prices, just like low prices cure low prices. Part of the problem is right now is that we're climbing a wall of worry, right? A lot of people don't believe that this oil price rally is sustainable or is real. And I'm seeing people even on Twitter, people that I follow, maybe we're wrong. We have one guy saying, just wait a year from now, we're going to have a bust. We're going to be down at $25 a barrel. I don't see that. Anything's possible. And but when you start putting time and price on a prediction, that's a quick way to get yourself ostracized very quickly, let's say. But the fact remains, we're seeing more and more information like this come out, where all these people, Russia's in the same boat. There's certain views that Russia doesn't have the production capacity, and that same with its natural gas. And things they only need to slip at the margin 1 or 2%, and you have a major problem. And that's what we're looking at. So, now we're seeing the Iraqi oil minister, I think, said last week that, like a couple months ago, he said, well, $80 a barrel was probably too high. Now he's saying $100 a barrel is too high, but that's where we're going. So, I don't say it's a straight line, but, the demand's not going away as far as I can see at this point. And here is the issue, right? It's not just oil and gas and coal, it's everything. I really like this Crescat Capital. They put a lot of good charts out. So kudos to them and credit to them on this. But this is a year-over-year change and commodity producers' CapEx cycle, aggregate trailing 12-month USD millions. It's commodity producers with market cap above 1 billion in the Canadian US stock exchanges. And look where we're at. We're down, we're down at these low levels. We've been down here for a decade. I mean, we've been, we had this little spurt after the 2008 financial crisis, and then we've been in decline. We had another little spurt, but you just see the money's not being invested. Yet the demand and the required supply that has to be met and demand that has to be met is growing over time, and we haven't made the necessary investments. It's really that simple, and it's across the board. And I think that's what, I put it up here, lack of investment equals lack of supply. Unless, if supply falls faster than demand, prices go up. You don't necessarily just need things to just grow forever either. If you have an insufficient supply, and we've really screwed up the supply chains to boot, this is where we're at. And you have oil company after oil company saying they're not going to go, their mandate is no longer go just drill, baby, drill. It's pay down debt, which is accretive to shareholders, buy back stock, which is accretive to shareholders, pay dividends, which is shareholder returns. This is what they're all about. Do I think at some point that changes? Yes, but not in the next couple quarters. The mandate is to return money to shareholders. And we've seen executive after executive say there's just no appetite from shareholders to just drill, baby, drill. Those days are over, at least for the near and midterm, in my view. Here we go again, crude inventories at Cushing, that's Oklahoma. Stockpiles at the biggest U.S. oil depot are falling to critically low levels. The last time that happened, crude cost more than $100 a barrel. I may have to subscribe to Bloomberg. I really don't want to, because a lot of these articles I want to talk about are on Bloomberg, and then you only get to look at a couple a month free. Then they hit you up to a subscribe. But you get the gist here, right? This is where we're heading to $100 a barrel. We're not seeing this turnaround. We're in a shoulder season, and we're still seeing draws, okay, in the weekly reporting. And I'm not going to get into backwardation and these curves and stuff. That's a little bit too complicated and beyond the scope of this. Suffice to say that demand is exceeding supply, and stockpiles are being drawn down. And that's the price signal that's being sent to the market saying, we need you to produce more oil. And they're saying they're not going to do it. At least that's what they're saying currently. And so here's a CEO from a conference call for Precision Drilling. They do drilling wells. And here's what he said, Kevin Nouveau. We believe the mantra of capital discipline and sustainable shareholder returns will continue to be a key strategic focus of our customers. His customers are oil and gas companies, because he does the drilling for them. So what does he say? We believe the mantra of capital discipline and sustainable shareholder returns, that's buybacks and dividends, will continue to be a key strategic focus of our customers. So you're seeing this more and more. They're just not going to go out and drill like they did before. At some point, I believe they will, but it'll be at much higher oil prices, and they'll have to be sustained for some significant period of time. And the wall of cash flow, we're going to start seeing the earnings start coming out next week and into November with a lot of these smaller mid-cap Canadian companies that I'm in, and a lot of the other companies. And I think people are going to be surprised. We saw Halliburton come out last week. It was kind of a mixed message. Baker Hughes came out and said things were improving, but their numbers weren't that good. Halliburton said things are definitely improving. They gave good forward guidance. So you're seeing it, right? Even with the capital discipline, things are improving in the service sector, which is an area that I intend to move into further also in the newsletter. The moves that we've seen in the oil companies haven't even reflected the current oil price, and the oil services stocks are still flat on their back. They are like terrific bargains, and they are eventually they're going to be later in the cycle as the money starts flowing down from the high cash flows, as the companies and the national oil companies go out and rectify this declining supply issue. And there's just tremendous values right now. I just saw Valaris last week just activated a drill ship for Petrobras for a long-term contract. You don't spend, 20, 30, $40 million, whatever it's going to cost to bring that ship out of storage, do the retrofit, tow it to Brazil, or drive it to Brazil, and then put it online for a 548-day contract, unless you think that your business is improving. And so, yeah, Petrobras will pick up some of that cost, but the Valaris has to pick up some of that cost too. And that's not an insignificant decision in my view. These are the green shoots, if you will, of the recovery of the oil service sector. So here again, here's a note. Upstream integrateds from the road. Let's see, 2 days of marketing in Toronto featured a healthy amount of cross-border discussion on names and U.S. crude growth expectations, blah, blah, blah. With a clear focus on capital allocation in the Canadian upstream and integrateds group, given sizable valuation discounts. But here's what I want to get to. With investors broadly paying little for growth in the space and free cash flow to EVs largely in the 20 to 25% range, our Canadian coverage universe, investor preference for a greater clarity and emphasis on accelerating buybacks more than 5% standard normal course issue bid levels. That means buy back more than 5% of your shares during your announced your bid, and base dividend growth under defined capital allocation frameworks as a starting point in closing valuation gaps is clear. So this is what we've been talking about. This is what Eric Nuttall's been talking about. It's happening now. It's picking up momentum. We're seeing more and more announcements. Shareholders want buybacks and dividends. They want companies to come out and say, we're going to devote this much to buybacks, this much to dividends, and start getting on the board. And when those announcements come, I believe you're going to see the re-ratings. And if they don't, they'll just keep buying back their shares until they become valued again. Like I said, I think if you're not in energy and you're a portfolio manager, you're going to underperform tremendously. And I think that's where a lot of the volatility is going to come. I think you're going to see people moving in during the quarter and then flushing them at the end of the quarter so they don't have it on their books. So we will see. I'm thinking, this could lend itself to some opportunities too. You probably wouldn't want to be buying at the end of the quarter because that's when people are going to be flushing the names to get them off their list after, riding them for the majority of the quarter. That would be something to take a look at. So here's another article. China wants to cool coal prices. Similar moves from metals and crude failed. This is, if you remember, we talked about this maybe a month or two ago. China was going to release copper and oil from its strategic stocks to cool the price. That might work in the short term, but then you've depleted your stocks. You have to rebuy. So it didn't work before, right? China's latest attempt to lower runaway commodity prices, this time for thermal coal, is likely to follow a familiar pattern of initial success followed by failure. And we have seen coal prices kind of get dinged a little bit, and the companies took a hit. BTU, for example, I've got a lot of, but it's been pretty volatile regardless. Anyway, so far this year, Beijing has acted to cool prices for metals such as copper, aluminum, zinc, and iron ore, and for energy products such as crude oil and now coal. Each intervention has met with some success at first, but over time, prices have reverted to their prior upward trends. And, unless, we have this big output, huge output in coal, which I think you probably see eventually, just like you will see for every commodity. But I've seen, issues, a lot of the North American producers are unable to increase production. It's not easy just to turn this stuff back on. And you're reluctant to do it if you think it's just transitory, if you will. Okay. And if you're telling everybody this is transitory, and people are fearful, right? You're coming out of a bear market. A lot of these companies went through bankruptcy. Managements are skittish. They're not just going to run out there and just say, okay, we're going to open up another long wall in our coal mine. We're not going to go ahead and build another, washing plant for our coal. We're going to do this. We're going to do that. They want to see some certainty. And I think, we've seen already, like I said earlier in this video, the same thing coming from a lot of the oil companies. They're just not going. And then you pile on the ESG nonsense and the demonization. I mean, why would you do that? And how would you even explain that to the board of directors? So I think the same thing's going to happen here. We see some, a winner's going to play a big deal in this, I think, too. And I think it's really going to bring home to the masses, it's mostly us investors and speculators that are seeing this and forecasting this. But I think the average person is going to see this. John Q. Public is not going to be happy. So here's what we talked about earlier. Here's a tweet. Petroleum minister in India says gasoline consumption in India is today already 15% above pre-pandemic levels and diesel 6 to 10% above pre-COVID levels. So the economy's bounced back tremendously in India. many places, and you need energy. To have a growing economy, to have growing economic activity requires energy. Energy inserts itself into everything we do, as we've talked about before. It's it holds back chaos. It reverses entropy temporarily. So it helps us battle entropy and chaos. So you're not going to have less energy demand unless you have a lower standard of living and less of everything. And people certainly don't want that. So here we are. I mean, this is why oil demand's going higher. This is why stocks are being drawn down. This is why the price is going up. And this isn't helpful, right? This is why I keep putting these things on here. I don't cherry pick this, but I'm just seeing so many stories like this, right? Exxon debates abandoning some of its biggest oil and gas projects. Some Dow Jones off of Bloomberg. Exxon Mobil's remade board of directors. You remember they had that activist board that got the backing of like BlackRock or whatever, some other big private equity or hedge funds, and got a seat on the board, and it was going to get Exxon to get away from its core business. I mean, what kind of activist is this? An activist usually comes on and tries to get the company to be more profitable or get rid of the old management that's holding back the company. These guys evidently have gotten on there to destroy the company and make it go away from its core competency, which is producing oil and natural gas and petrochemicals at a reasonable cost for society. So ExxonMobil Corp's remade board of directors is debating whether to continue with several major oil and gas projects as the company reconsiders its investment strategy in a fast-changing energy landscape, according to people familiar with the matter. So we'll have to keep an eye on this, right? We've talked about it. We've seen more of this infecting a lot of the Western thinking, especially in the US and Western Europe, this nonsensical idea of fairyland tales of clean green energy and no externalities, and everything's rainbows and lollipops. And if nobody's drilling for oil and natural gas, which it appears that's the case or hasn't been, and we really haven't made the transition yet to rebuildables, i.e. renewables, whatever you want to call them, then we got a big problem getting ready to happen. And that's what we're talking about. It's happening. We're in an energy crisis, and we're just seeing, I'm not cherry picking. This stuff is all over the place, this kind of news. And so I want to finish up today with uranium. I think uranium is just a tremendous story. Do I think it's too late to get in? No. It would have been better to get in a year or two ago when you could have bought the things for a lot, 90% less in many cases what they are now. But I just don't think people realize what's happening here. I mean, we have, a year ago, I remember 2 or 3 years ago when I was started this series of videos, I would talk about in the abstract, the supply demand dynamics and, the industry being in liquidation, and, nothing ever happened, right? The price just stayed there. The stocks didn't do anything. And I think people, would say, okay, well, I agree with it, but then, no one's going to sit there and buy, stock in a uranium developer, or it just sits there and does nothing for 2 or 3 years. Most people won't do it. But I think we're getting paid off now, and we just have more and more positive information. You have the Sprott Trust sucking up pounds every day or every other day, whatever it is. You're just taking tremendous amounts of material off the market. And now you have an announcement by KazAtomProm, which is the Kazakhstan's national atomic company, announces it's going to start an investment physical uranium fund. And so you've seen, various companies buying uranium. You've seen all kinds of discussion about new demand, Japanese restarts, recommitment to nuclear. France is recommitting to nuclear. The United States is talking about it. We've extended the life of plants. We've saved the Byron and Dresden plants in Illinois. And I just think, I think what's really going to, crystallize this thing. You had a situation in the EU where 10 of the countries in the bloc have said they want the nuclear power to be included in the renewable lexicon or whatever. And so you're just seeing it move that way, right? There's no choice. And I just think that we may even be underestimating how big this thing could end up being. I don't like to talk like that, rainbows and lollipops, and get too crazy talk, but this thing could really take off, and more money's coming into it. And like I said, you get into that flywheel effect where money comes in. I'm talking about bigger money. It comes in, it drives the price higher. That generates more interest. That generates more funds coming in, which generates more interest. And the thing just keeps snowballing like an avalanche. And so this is, KazAtomProm, I think we've pretty much expunged the idea out of most people's heads that, this used to be the boogeyman a couple years ago. Well, if the price of uranium goes to $40 a pound, KazAtomProm is just going to come in and flood the market. And as I explained many times, and I think should be clear by now, KazAtomProm is not an old Soviet state company anymore that just tries to produce to meet the 5-year plan, to increase production every year for the sake of meeting the plan. It's a company that realizes that it's managing a national crown jewel. It understands that it's in the cuckoo bird seat and it can be a price setter. And it probably has more information about the uranium market and the nuclear fuel market than most other people besides Cameco. And so why wouldn't they manage this to a maximum benefit of the joint stock company and the Kazakh national government and state? And that's what they're doing. They set up the trading arm a few years ago, and now they're setting up this physical uranium fund and seeding it. So what's the article say? It's straight off the KazAtomProm website. KazAtomProm is pleased to announce that its board of directors has passed a resolution to participate in a physical uranium fund, ANU Energy Ltd. The fund will hold physical uranium as a long-term investment, with its initial purchases financed through the founders round investment totaling $50 million, sourced from KazAtomProm, National Investment Corporation of the National Bank of Kazakhstan, and Genchai Global Limited at 3%. Once the fund is operating, a second stage of development is expected to be carried out through an additional public or private offering, with the timing and details to be determined by market conditions. At the second stage, the fund is expected to raise capital of up to $500 million from institutional and/or private investors, with the proceeds to be used for additional uranium purchases. This is a quote from the company. The establishment of ANU Energy is a project that has been in development for almost 4 years as part of KazAtomProm's broader value-focused strategy, not meeting the 5-year plan to just increase production, a broader value-focused strategy that has been in development for 4 years. See, this is the mindset has changed there. And the fund will be operating in an environment of tightening supply, driving positive benefits for its stakeholders. So, they realize how small the market is. They realize they have a big control of it. And so why not create another vehicle to help benefit and get the price up and keep it up for some period? Okay, so this is a really tremendous, I think, possibilities. And like I said, it's just one more piece of positive news. I mean, people say you have the wind in your sails. There's like a freaking hurricane in our sails with all the good news that's happening. So I'm really positive on uranium. I'm just sitting back now. Like I said, if you're a real want to just be straight uranium, I don't subscribe to it. I probably should, but I've heard good things. I know Justin Hune. I've interviewed him many times. He knows what he's talking about. A lot of people have spoken very highly of his newsletter. If you want to be like Mr. Uranium, that's where to go to in my view for the retail investor. I have uranium things in my companies in my portfolio. They've done very well, but I just don't have the time and the focus that he has to cover that niche and or niche. So shout out to him on that. Check it out. But I'm a generalist investor, and I buy things that are cheap and out of favor that I think have a catalyst to go from horrible to less horrible. And that can lead to tremendous revaluations, and has, and will continue to. So that's what I do. You're going to get from me anywhere from emerging market companies to oil companies, to copper companies, to gold stocks, to, Uzbekistan, all kinds of stuff. If it's cheap and it's down 90%, I'm going to at least look at it. I'm very eclectic. I'll buy anything if it's cheap enough and I think it has a catalyst to turn around. That's my whole deal. And what am I looking at now? I think cannabis stocks have been tremendously, beat up. I don't think they're low enough now to buy. I think, but that's going to be a tremendous market too. The initial, it's like every other market, like internet stocks and something like that. They had this big, tremendous thing a couple of years ago. Everybody was in them. There's a lot of hokey companies. And then what happens? You know, you have a bubble, it bursts, all the has-beens, wannabes go away. And at some point you distill it down to what the real companies are going to be. And then this thing recovers. And, you know, after a big crash like that, you get valuations that are really being created. And, you know, what is another thing I'm looking at? Well, I'm looking at different countries and their demographics and their housing markets and how underhoused places like Mexico are and how you can take advantage of that. Or maybe banks that have recovered in Europe that have finally got a lot of their non-performing loans off their balance sheet. There's opportunities all over the world. And, you know, we're looking to turn $1 into $10, not 10 into 11. All right, guys. That's it for this week. Appreciate the, I think that's the last slide. Yeah. Appreciate the continued viewership. I'm working on a lot of different things as time allows, and maybe they'll get rid of me because I won't take the vaccine. I'll end up having to do this full time by necessity, and then we'll see what can really happen. But so far, so good. And just appreciate you guys tremendously, and look forward to talking to you each week. Take it easy, and we'll talk to you next week.